Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast, Carol Massar, Tim Stenovec, bringing together our Bloomberg Television, Radio, and YouTube audience to parse the crucial moments of the day. And of course, guys, coming off of what yesterday, of course, was the biggest sell-off we've seen going back into May. We saw a little bit of dip buying, but that enthusiasm seems to be fading as we get closer to the bell.
Yeah, absolutely. Moving down here in the last few minutes. So we're going to really see very little movement on some of those major equity averages. What's interesting, Romaine and team, it feels like I just looked at the S&P and the Dow and the NASDAQ, and we really had about 1% from peak to trough today in the moves here. But again, as we get closer to that closing bell, Tim, not going to have too much movement here.
Yeah, look, I thought that on a day like today where we did see a little bit of buying at the beginning of the day, and then toward the end of the day we saw the S&P 500 moving higher. I thought it would continue to move higher. We'd see a little bit of dip buying come back at the end of the day, but that's not indeed the case that we're seeing today. Looking like the S&P 500 is going to finish up almost unchanged.
I feel like commodities with the tail again. We just had all down throughout the day, Bloomberg Commodity Index, and sort of that shone a light on some of the worries, the nervousness in this market, whether it be China, whether they look ahead to the Fed tomorrow.
What's so interesting, though, Caroline, is when we look for signals and cues across asset, at least within the bond market, unch on the day. You had, of course, a big rally remain on bonds yesterday with yields lower, but today not confirming perhaps maybe in any direction. Yeah, absolutely. And we should just point out here, too, I mean, the drag that we're seeing on the S&P 500, that's coming primarily from Disney, which is now down about 4%. You have Apple, Tesla, Microsoft, Facebook, Alphabet, all the names you want to see in the green. They're in the green here, but you also have a lot of big heavyweights in the red. That's one reason why you're seeing the S&P 500 dip into the red as you get those closing bells. Right now, it's
cheering
down.
there, aren't they?
They're cheering. Well, they're supposed to cheer no matter what. They're happy about something. I don't know who these people
Romaine,
are.
maybe that's a drum, not a bell.
Well, they're living vicarious surgical there, and Greenwich, ringing the bell over there at the NASDAQ here. Confetti is falling for our radio audiences here. There is confetti for the NASDAQ. The NASDAQ composite up 32 points, or about 0.2%. The S&P 500 looks like it's going to finish in the red, less than 0.1% in the hole, down about 3.6%, 3.6 points, I should say. The Dow Jones Industrial Average down 48 points, or about 0.1% as well. The Russell 2000 going to squeak out a modest gain on the day, up about 4 points, or 0.2%.
A lot of hugging there at the New York Stock Exchange. Just going to point that out. All right, S&P 500. For some context, Dave Wilson was talking about this earlier on air with us. You had 331 names down, 171 higher. So that gives you some feel in terms of the internals of the market today. And Taylor, 3 unchanged. So certainly more of a risk-off trade ultimately by the close here.
Yeah, and you certainly see that for the radio audience when we have the sector winners and losers. Yesterday, there was a lot of losers within the winners category. Today, there's only about 2 losers within the winners category. So let me give you a few sectors that still were green on the day. Some of this is a reflationary trade. If it's autos, it's energy. You're up 0.4 to almost 1%. You have some household products, though, in there, and some food and staples, which gives you that hint of defensiveness. But you go down to the bottom of the screen, and I have to say, Carol, I think you were correct in pointing out how sort of broad-based this feels. It's financials, it's media, it's food and beverage, it's telecom. So it's sort of that reflationary as well as perhaps maybe some of that defensionary trade.
Yeah, it's kind of like investors saying.
Defensive.
I'm trying to get my words out.
I knew what you meant.
I've been there. It can be tricky. I get it. Let's talk about some of the gainers today. See, there we go. Twitter up about 3% here at the close. Could be that the ride-hailing giant finally, which posted a quarterly loss of about $5.2 billion, maybe about to turn an adjusted profit. Company saying in a filing adjusted earnings before interest taxes.
What does that sound like?
That's not community adjusted.
Don't you love that? I wish I could just back out.
Adjust my income?
I know. Wouldn't you like to just back out all this stuff when we do things? Well, anyway.
Just write things off.
I know. I mean, wait a minute. Okay, so adjusted earnings for Uber, they may range from $25 million loss to a $25 million profit in the third quarter. So there's some optimism about that maybe it's happening earlier than everybody expected. Do also want to mention, that was Uber, right? Okay, Twitter, they are up almost 3% here at the close. They paid or planning to pay $810 million million settlement, settling a shareholder class action lawsuit, and that has made the stock move higher. Suit accused the company of painting an overly rosy picture of its future.
Yeah.
They did not. This is another one. It concluded without any admission of fault or wrongdoing by Twitter, but I'll pay $810 million.
Yeah.
I always wonder. Last one, CGen, I just want to mention, it was top in the NASDAQ 100. I mentioned it yesterday, up another 3.7% today. This after its TIVDAC won accelerated approval about 3 weeks earlier than an FDA deadline. We kind of gave a highlight of this yesterday about some of the biotech names that might be moving because of FDA approval.
Yeah, and just real quickly before you go on, Tim, I just wanted to point out these American airline JetBlue headlines that crossed the wire just a little bit ago. This is on the Department of Justice challenging that alliance that the two had here. We kind of knew this earlier in the day. Dow Jones reported it is now being confirmed here. The DOJ basically saying that it and states have filed suit now to block this deal. Basically, it's an alliance. It's kind of complicated. Basically, they swap slots at various airports. Southwest and some other airlines complained about it. Some antitrust issues raised. Now lawsuits filed. Tim,
yes,
it's declining.
Look, stock moving not significantly in after-hours trading. As you mentioned, it was priced in. We learned earlier from Dow Jones about it, but now it's official. Hey, you got the gainers, Carol. I got the decliners. Let's start with Disney. Shares lower on the day after the company's CEO, Bob Chapek, said that we should expect growth in Disney Plus users to slow down. Of course, Disney Plus is the core as far as what people are thinking about the transition to streaming for the company. This because of the Delta variant and the rise of the Delta variant. The company has dozens of movies and TV shows that it's not able to move forward with, at least at the earlier timeline, as a result of this. Activision Blizzard shares also under pressure today. This after the company yesterday, shares were down more than 4%, extending yesterday's drop of more than 4%. The company said it was subpoenaed by the SEC. And then DraftKings finishing the day down by 7.4% after the $22.4 billion bid for Entain.
All right, speaking of decliners, here's one in the after hours already down 2.5%. Fedex coming out, and it's all about its outlook. First quarter adjusted EPS of $4.37. Hang on a second, guys. I just lost it. First quarter adjusted EPS $4.37. The estimate was for $4.92, so that's significantly lower than what everyone was anticipating. So cutting its year outlook, that stock again down 2.8%. We want to see what these companies are doing. These transportation companies, we know FedEx came out yesterday raising rates.
Did you see they said operating margin?
Yeah, well. Yeah, what is it?
6.8%. The street was looking for 8.5.
And this is why? Because the labor
concern.
Availability, you go into the press release, negatively affected by an estimated $450 million year-on-year increase in costs, constrained labor market, impacted by labor availability, network inefficiencies, higher wage rates, increased purchase transportation expenses. Here is the COVID supply chain issue front and center for FedEx.
Well, and they warned about this yesterday. Tim and I were talking about it earlier. They talked about a challenging operating environment, right, Tim? And they said that they're going to be raising their rates the most in a decade.
You're raising their rates the most in a decade and across all services as well, Taylor. Just another headline here. The first quarter adjusted EPS coming in at $4.37, lower than estimates, cutting its year outlook for FedEx. Taylor.
Yeah, you know, it's very interesting as we talked about raising those rates, as you mentioned, the highest going back since 2011, on average by 5.9%. Dare we remind our audience when we talk about the Federal Reserve meeting tomorrow, once you raise those prices, that doesn't sound transitory. You can't really bring those prices back down. And 5.9%, Romaine, certainly sounds higher than, of course, maybe some others were expecting. So they're talking a lot about their operating results being declined, of course, due to these higher expenses. Like Caroline was saying, the staffing challenges, the air network impacts, and it is an international issue. It is a U.S. domestic express package issue as well.
Yeah, and we're going to get back to that in a second. Adobe earnings are crossing the wire. Of course, you know it for Photoshop and that big creative suite that they have. Their fiscal 4Q revenue coming in pretty much on the nose, $4.07 billion. But some of the other numbers here, it's kind of a mixed bag here. I'm going to be careful with some of these numbers here, but they do appear to miss, including their digital media ARR, which is said to be about $550 million. Based on the Bloomberg headlines, it says the street was looking for something a lot more than that. Also, we should point out the digital experience segment revenue grew about 22%, and the subscription revenue on the digital experience grew about 26%. Now, this is pretty significant here because the street was looking for something just a little bit stronger than that. Some of these comparisons are going to be a little bit tricky, but overall, they beat on some of the top line numbers here, but on some of the segment revenue, they appear to be coming in just a little bit weaker than what the street was looking for.
And to be fair, the stock's up about 29% so far this year. So again, I always think about when we've had a run up, the expectations maybe are a little bit high here. So that when there's even maybe slight disappointments here, you're going to see that trade move a little bit lower. And we're definitely seeing that in the after hours here.
Stitch Fix earnings out too.
Yeah, gaining 3% after hours, fourth quarter profit topping estimates. So clearly we're all at home and still wanting our clothes delivered, it would seem. And so not wanting
FedEx,
to get
which costs them
FedEx, which then cost them a little bit. I had my Rent the Runway delivered yesterday, a new type of delivery going to New Pest instead. What did I get? I got a couple of dresses and neither of them fit. So I'm sending them back, sadly.
Wonderful.
But
why shipping costs are so high.
But exactly. Stitch Fix sees at least 50% year-on-year net revenue growth for the full year 2020. So still some disruption when it comes to the way in which we order our clothes.
All right, earnings. And let's not forget, of course, we've got that Fed meeting tomorrow. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again, same time, same place tomorrow.